Hi, and welcome back. So let's start talking now about how you raise capital and where the various sources are that you can raise it from. If you're an early stage company, one of the most likely places you're going to look for money in the very early days is from the category called friends and family, or as some people put it, friends, family, and fools. So basically, these are relationship type of investments they're most likely to be an equity investment, not a capital investment. And again, it's based upon your relationship. You have family members who want to invest in what you're doing. You have friends who want to invest in what you're doing. And it is probably the least expensive form of raising capital, but it also could have an impact on the dynamics of your relationships with your friends and family. So you have to be very clear with them when you're talking to them about the potential investment in what you're doing, that it's a high risk operation and therefore there's a potential for high rewards. There's also a potential for losing all their money. And even though it's friends and family, you want to make sure that you treat the relationship as a formal one, and you want to make sure everything is documented in writing so that later on things do not become difficult if things don't go the way they expect or you expect. There's also a category of friends and family which are actually family offices. Generally speaking, those are funds that are maintained by very wealthy families, normally managed by a professional fund manager. And oftentimes they will invest alongside of an angel or another friends and family investor. And again, they basically rely on the relationships they have with the family that the money belongs to, and their relationships before they will actually consider an investment. There are a significant number of family offices in the U.S. Forbes has estimated between 3,000 and 5,000 family offices exist today that have over $100 million of managed assets. Now, this chart's an interesting chart because it shows you how investments have changed in the startup world over the last 10 years. Or actually, sorry, over the last couple of years, and that forecasted into the future. So if you look at the chart in 2011, friends and family were a relatively small piece of the overall startup investment. Then you had angels as a relatively large piece, about the same as venture capital investments. And then if you look at the way they're estimating this is going to change, friends and family are growing significantly. Angel capital is really growing significantly. And venture capital, as we've discussed in prior lectures, is actually becoming a smaller piece of early stage startup investing because they are de-risking themselves by allowing these friends and family investors and angel investors to do the early investing. They'll come in at some point when there's actually some traction and some potential and a proven market and a viable product. So friends and family is a place to look first when you're looking for money for your early stage venture. Remember that it's all based on relationships, and it can be damaging if things don't go as you expect. You have to be consistent when you apply the process to a friends and family investment, just as you would a third-party investment. And they are becoming a much greater source of early-stage investing over the years. So start looking locally, among your friends, among your family, and their relationships when you're looking for early-stage money.